types of mutual funds based on structure. So in this lecture, we're going to define mutual funds. What's mutual fund? You are going to be a future great mutual fund dealing representative. You have to have a great foundation and knowledge of a mutual fund. So what is mutual fund? In simple terms, a mutual fund is like a big pot of money collected from many people. Those people are investors, okay? Then this money is managed by professionals who invested it in things like stocks, bonds, or other assets to help it grow. So the concept here is instead of buying individual stocks or bonds yourself, you own units of the mutual fund. Okay. I'm going to elaborate more on the concept here. Just bear with me, please. For now, just know that mutual fund means collecting money from different investors, put that money all together, and buy an asset, which is called mutual fund. That asset includes different percentage of other assets like stocks, bonds, or other securities. Now, let's work and explain on this mutual fund with a scenario, like always. I think this way it is more understandable and it's easier to absorb, okay? Let's say one day your usual client, Mr. John, walks into your office looking excited. Okay, John says, "All my friends have invested in mutual funds. I want to invest too." And you reply, "That's great, John. Do you know what a mutual fund is?" And John would say, "No idea. Explain it to me. What is mutual fund? I'm hearing it a lot." So you have to be able to teach John and explain to John what is mutual fund. So in very, very easy language, easy terms, let's say 10 people, including you, walk into the bank. In this scenario, you're not a mutual fund sales rep, okay? Let's say you're just an investor. Let's say 10 people, including you, walk into the bank, each wanting to invest $1,000, okay? So the bank pools their money, those 10 people together, into a single investment fund, okay? So now total amount of money will be 10K. 10 people each having 1,000, 10K. Okay, there is 10K, okay? Now, instead of each person, each of those 10 people trying to pick stocks or bonds on their own, the bank hires a professional fund manager to handle the investments, okay? The fund manager, what does it do? The fund manager takes the 10K, collected 10K, and invested it in a mix of stocks, for example, Apple stock, Microsoft, Amazon, and then bonds, government bonds, and corporate bonds, and other assets like gold or international markets or even real estate. Okay. So each unit of mutual fund includes a percentage of different securities. For example, 30% equities, 40% bonds, 20% gold, 10% T-bills, and others. So I guess we're shaping the concept of mutual fund fine here, okay? So let's say you are one of those 10 people, okay? You have $1,000 on your hand. With that 1,000, you can go in your TFSA, buy 2 shares of Microsoft stock. Microsoft stock is around, let's say, 400 USD. With that 1,000, you can buy 2 shares of Microsoft stock. Or instead, you can give that 10K to the bank. Okay, bank collects these small amount from different investors and build or invest that money in a mutual fund. So instead of buying just two shares of stock of Microsoft, you can have you can invest in different securities, different assets, bonds, uh, I don't know, like gold, securities, common shares, preferred shares, different types. Why? Because when you're buying a mutual fund, you're not buying shares like you did with that 1K and bought two Microsoft shares. No, you're not buying shares. You're getting units of that mutual fund. That unit include different assets in itself. Okay? That's the mutual fund here. Now, when we get into more details, you will learn more about mutual fund. But I think we built a good foundation so far. Now, how do investors own a part of the fund? Okay. Here we want to talk about the concept of units and net asset value. So let's get back to our original scenario. John asks, okay, I understand that the money is pulled together, but how do I know how much of that mutual fund I actually own? You should reply to John. John, that's a great question. You're smart. And the answer is units and net asset value. You need to know these two terms. So, when John and the other 9 investors contribute a total of 10K, the fund manager, so each mutual fund has its own manager. The fund manager, the person who do the day-to-day trading, issues units to each investors. Okay. Suppose the mutual fund starts with a net asset value of $10 per unit. So, what does it mean? Each unit of that mutual fund worth $10. Net asset value is that net asset value per unit here is $10. Okay. Now, how many units does John get in this case? Since John invested 1,000, he receives 1,000 divided by $10 per unit. So 100 units of that mutual fund is for John. And in total, we have 1,000 units. So each of those 10 investors get 100 units. Each unit worth how much? $10. So $10 multiplied by 100 units, $1,000, which equals to their original investment amount. So every investor gets units based on how much they invested in the mutual fund. Now, the question here is, how does John make money? Okay, we know that they invested in mutual fund, they own now some units. How do they make money? That's a good question. Let's say after 1 year, the mutual fund's investment performed very well, and the net asset value per unit increased from $10 to $12. Now, John's 100 units are worth $1,200. This is how the value of units of mutual fund increases over time. This is how investors make money from mutual funds. The next question, we get into type of mutual funds. We have open-end funds and we have closed-end funds. Okay, we have 2 types of mutual funds. John may ask another question. Okay, Nav. So I put my money in. Now, my question to you is, can I take out my money anytime I want? This is where we explain the 2 types of mutual funds, open-end funds and closed-end funds. Let's start it off with the open-end mutual funds. This is the most common type of funds. So, in open-end funds, investors like John can buy or sell their mutual fund units anytime at the net asset value per unit. Okay? so they can buy and sell anytime. The fund, the open-end fund, keeps growing as new investors join. So there is no cap. The new units can be issued to new investors. Okay, let's say Mr. John asks his friend David that, hey, my mutual fund is doing great. Why don't you buy some units? And David goes to the bank, and David wants to own some units. So in open end mutual fund, the bank, the investment firm, will issue new units to David. Okay, so there is no cap. So the fund keeps growing as new investors join. The open end funds are actively managed by professionals. For example, John invests 1,000 today, and later, if the value of the fund grows, he can sell his units and withdraw his money whenever he wants. Now let's get to close-end funds. Think of close-end funds like a concert ticket. What do I mean by that? I mean only a fixed number of seats are available. Here, seats means fund units. If Mr. David, who is John's friend, go to the investment firm and wants to buy uh, units and Mr. John has invested in a closed-end fund unit, David cannot just ask to the bank that, hey, issue me new units. No, there is no new units. Mr. David needs to buy it from other already existing investors, not the firm, because it is closed. There is no new units. Whatever in the market, you have to buy and sell from other investors. Okay, there is no new units. It's capped. So in closed-end funds, the fund raises money only once by selling a fixed number of units. Investors can't buy or sell directly from the fund after it starts. No, they cannot go to the firm and say, hey, issue me new units, unlike the open-end funds. Instead, units are traded on the stock exchange, just like stocks. Okay, if you want to buy a closed-end mutual fund, you need to buy it from stock exchange from other investors, not the investment firm. For example, if John buys 100 units of closed-end funds, he can't return them to the bank. He can only sell them on the stock exchange, stock market, to another investor. That's the key point. That's the key differences between open-end funds and closed-end funds. Great. I think we built a good foundation, but if you haven't captured and absorbed all the materials, no worries. This whole chapter is about every aspect of mutual funds. So as we evolve over time, you're going to learn more and absorb more. And please go crush the next quiz so you would be able to see what type of question you may get on final test from this concept. Okay? Great. You're crushing it. I'm proud of you, and I'll see you in the next lecture.